Hey everyone, thanks for tuning in. It's your old pal PeaceLoveMusic here, and we have just heard that the Fed is going to keep rates unchanged, which is what we were expecting. I'm going to be joined by a few of our chads in the ecosystem to chat about this, and also get some details on what's going on with the after conversation. See if Powell tips any news our way. We have the homie in the house. What's up, GP? They just announced no rate change. Rates remain unchanged as of right now. You're muted, sir.
Oh, whoops. I wonder if they are going to. I wonder if they're going to be hawkish or dovish sounding whenever Jerome starts to speak and give any type of indicator on what direction, like when or any time. You know that they're trying to avoid cutting these rates, and Trump is urging them to cut rates, but they see metrics increasing and getting better. So like, what's your take?
My take, well, this is what I was expecting. And I think it's a sign that the economy is it's really not in bad shape to the point where we require rate cuts. I do think that he'll probably have some mildly, I think that he'll be cautious in his statements. And I think ultimately people will read what they want to read into it, right? Which is how it always happens. But ultimately, the economy feels generally strong to me from all the things I see, even though there's some saber rattling and there's some tensions in the international trade scenarios. I think long term we're in good shape, which I don't think that they're going to be, I don't think they need to tighten, but I do think that they will, that they will kind of start to go to more neutral than even they are, but I don't think it's happening right away.
So no real way of knowing when, or like you said, they're not going to allude to anything like soon or later. Like, they're going to keep everybody guessing.
Right.
So to avoid, all right, I get it. The conditions are improving, right? Like, so they think that it's like it has to do with where they're keeping rates, so they're going to keep them the same, right? Am I getting that right?
The rates are remaining unchanged, which means that they don't see any need to lower rates in order to increase liquidity in the markets, because they don't feel like there's a detrimental situation in the financial markets right now that warrants such a maneuver, which ultimately telegraphs us that the situation is not bad enough for them to feel the need to cut rates.
Everything's gotten cheaper. I'm not gonna. I mean, it is a lot cheaper.
Gas is down, right? Fuels are down. Housing markets are starting to stabilize a little bit. There's still not enough inventory in my market, but prices are starting to stabilize. So it's.
Don't forget the big one, right? Eggs.
You're absolutely right, though. Eggs was a temporary thing anyway. That wasn't really financial markets issue.
But everybody was talking.
Everyone was talking about it because the media made it a reflection of the economy, when it really wasn't. They culled a huge portion of the chicken supply unnecessarily, by the way. So that was actually a market manipulation. But it, now that supply's gotten back into range, then the prices have come back into range of the market, which at the end of the day, that's really all it is supply and demand. That's what determines pricing action in markets. So,
this just in. SBTC Cap 3 launches May 15th, another step toward becoming the largest Bitcoin layer and making BTC productive. Mark your calendars. So Cap 3 coming up very, very soon for SBTC.
Oh, what's the next cap? Does it say?
Let me see if I can get into the comments here, and I will also bookmark this and then bring this up. Maybe we
Quick
can.
shout out to Ace in the place and Crypto Dude. What is up, Crypto Dude? And Ace, by the way, as well as myself, I am also a huge fan of your Led Zeppelin T-shirt.
Thank you,
Well done.
thank you, good sirs. Yeah, that's one of my. It's like one of my things, man. I love band tees, but then I also have an uncle that is very, very much a metalhead. Very, very much like into like, dude, he's the one that put me into like rock music, right? So a lot of the times he'll order these T-shirts and band shirts. So I've got the dime bag shirt. I've got my this was Led Zeppelin. I got this from the thrift store. Like, dude, like I was surrounded by the music when I was young, so it's natural. It's natural.
Yeah, that's awesome, man. And that's, we are shaped by the people in our lives, the ones that show us love and show us attention, and we adhere to the things that they like because the values that we associate the values that they instilled in us with those things. So keep that in mind when you're actually interacting with your people that look up to you, that you are also influencing how they're going to move forward in the world. And there's a lot of responsibility there, and there's a lot you can do that isn't an immediate payoff. But if you treat people right and you teach them the right way to treat other people, you're making the world better.
And that's
by the way, we're just waiting for the FOMC press conference. We will bring that live, and we'll have some commentary with that as we go. But we're just chatting as we do, a little DeOrganized action while we're waiting for the meeting to go live.
That's what it's about, man. Keeping the people in the know. We'll be able to see Jerome talk in real time, see what's going on very shortly. I think they said like 2:30, something like that. It was around 2:30.
Yeah, we're waiting. It might be 2:30. Sometimes it's a little before, sometimes it's a little bit after, but we'll bring it to live coverage. Jack said he's going to be joining us as soon as he gets back in front of his desk. And I'm actually waiting. I haven't heard back from Landy, but he mentioned yesterday if he can join us, he absolutely will. Actually, I'm going to drop you know what I'm going to do, GP? I'm going to drop the link in the morning show chat.
Yeah, should I drop it in the night show chat?
Yeah, anyone that wants to join and come on for the chat, they're welcome to.
Yeah, good idea. I think that getting the guys up here and just getting as many takes as possible on what Jerome says couldn't be a bad thing. I like whenever we have a full panel too. So of course, let's invite the guys. I'll hit the night chat, and then of course, tune in at 7 p.m. ET for DeOrganized Nightly, where we have your favorite GigaBrain astronaut scholars in the same room and discuss the latest alpha. But of course, they'll be here as well. Like maybe we'll get some base takes, maybe we'll get some hot takes. Who knows? The DeOrganized way.
We'll definitely get some hot takes. We talk long enough. It's inevitable. It's as inevitable as Bitcoin and as inevitable as stacks. You will get hot takes on DeOrganized.
So yeah, I've been playing with the new. Here we go. Let's see. Breaking. The Fed has announced here, and I'll change this up real quick so we can see it. The breaking. The Fed has announced that rate cuts are unchanged. So we already know that, but still, look at this picture of Jerome. Doesn't he look so perplexed? What's going on with Jerome here in this picture? Is this an AI?
Actually, I'm going to give you my honest read of this. He feels like he's explaining something to people that don't understand what he's saying. That's what that was. Oh, we got the Shiflet in the house. Hey, what's up, sir?
Hey, how's it going? I'm getting my stuff set up real quick.
Solid,
yeah, no worries, man. We're just waiting on the FOMC press conference. I'm assuming you already know that rates are left unchanged.
Yeah, he's still getting set up, probably.
Yeah, Yeah, I mean, it was expected. I like to kind of play devil's
Yeah.
advocate and be like, hey, but they could lower them. Just never know. So it's almost like we're
Well,
during
if they did,
yeah, close to COVID, they're like, we're not going to lower rates, and then they ended up lowering rates. So
right. And I'm looking at least crypto markets right now look generally unchanged, but they're probably waiting what the tone is at the press conference and the answers to questions and all of that. So we'll see how the market responds in a little bit. But as of right now, it's pretty much flat across the board since the announcement of no change.
Yeah, it gets a little volatile on small, like very small time frames. It can go up, down, while he's having that conversation. So I think that, yeah, it's just an excuse to shake people out of their positions and chop the market up. It will end up eventually just probably staying flat because it's unchanged, right?
well, they've been doing like almost like a shadow QE. They've been injecting liquidity. As far as like there's some announcements yesterday that they were doing some stuff. So even though they're not lowering interest rates, they're still doing like a quasi QE. And then as far as I wasn't able to catch the show last night, but I'm sure y'all covered it. New Hampshire ended up being the first mover on the state SBR. So now FOMO is probably going to take place for the other states to get in.
Yeah, that's amazing. That really is amazing that New Hampshire is picking up.
How are they able to just
establishing a Bitcoin reserve officially?
So I've seen many proposals like from like Alabama and I think it was Alabama, but a few different other proposals from states to have a strategic Bitcoin reserve. How did New Hampshire just go from? Because I didn't hear about New Hampshire unless I missed it. I mean, which is perfectly plausible. How did they go from like no news about even considering it to being the first?
So they weren't one of the major states that people were tracking. Like people have their eyes on Texas, people have their eyes on Arizona and Florida. And Arizona had the letdown because the governor decided to veto it. And then Florida, I think, ended up dropping out of the race. And then Texas, theirs is still in the pipeline. But now that New Hampshire got theirs, Texas may almost have like a quasi fire under their ass to go ahead and get theirs pushed through. And then Arizona, they had the opportunity to be first, and maybe they'll reintroduce the bill and be like, hey, Hobbs, New Hampshire already got their stuff. Why don't we get ours?
So, yeah, you think that it's going to be a domino effect?
Yes.
Not fake at all.
Yep. Almost like the MicroStrategy effect. Now you have like MetaPlanet, which is a Japanese hotel chain, but they also have a Bitcoin financial strategy because of Dylan LeClaire. And then FLD, whose folds, they're the first. Yeah, absolutely. But now Americans can invest in them through OTC markets. You have to pay a little bit of a fee, but you can hold MetaPlanet in your brokerage, your IRA, or anything like that. So, I mean, they're at 5,555 Bitcoin, and they project that they'll be at 10,000 by the end of the year. So it's like, hey, I missed MSTR. Well, that's what's going to be other treasury strategies. Okay, well, here's MetaPlanet, who's a Japanese company. Here's Fold Holdings, who just recently went public, who's the first Bitcoin financial services company to go public. So it's interesting how, Michael Saylor is pioneering this strategy to where your company doesn't necessarily need to work as hard as NVIDIA or Microsoft or all these other companies. You can replace all the work and labor with just having a Bitcoin strategy, and you can get that same upside or even better upside because it's just writing Bitcoin.
Yeah, it's right. Well, here's the thing. I'd rather hold Bitcoin than hold shares in a company that is investing in Bitcoin. But I would diversify into both. But my preference would be to own Bitcoin first. Landy in the house too. What is up, Landy?
Azan, what's up?
It's a mix though, because many people want to. Not a lot of companies have the ability or want to spend the bandwidth to hold Bitcoin, so they'll hold a Bitcoin proxy, which is MSTR, and then also the other companies I mentioned, Metaplanet and Fold, once they get more established. But then you have people who want to hold their Bitcoin but still want to generate income without selling their Bitcoin. And in those cases, you have things like MSTY, which pays income based on MSTR's volatility. So that way it makes you a better hodler. You don't have to sell your assets in order to have cash on hand. Instead, you can just hold something which pays you cash. So it's interesting, all the different financial instruments that are coming out of TradFi with respect to Bitcoin.
Right. The adoption's here.
Yes.
Institutional adoption is already here. It just hasn't actually snowballed yet. It's about to. And not tomorrow, but it's coming. There's still time, but there's not a lot of time to position yourself if you have not positioned yet. Not financial advice. I'm not a financial advisor. I'm just your friendly neighborhood media person guy that comes on and gives you some news and information. So, don't take my word for it. Always do your own research. But there's some really smart guys in the room with us right now, and they know what they're talking about. It really is. Now is the time. Now is the time. If you have been waiting, the signs are here all around us that Bitcoin institutional adoption is here. It's not going away. It's being adopted, and they're really trying to hold the price back as best they can until they can really establish their own positions. And once that happens, your opportunity is very, very fleeting from there. So
right.
Definitely do not. Landy's here, but he said he's tied up in something, so he won't be able to chat for a few minutes. But we cannot wait for his analysis and once he's available. And I don't know how this will work out. I'm actually going to probably screen share the Bloomberg coverage on YouTube of the press conference once the press conference goes live.
That's at 2:30 Eastern.
Yeah.
Okay.
Yeah.
Speaking of MSTY, MSTY, they announced a $2.28 div this month. So depending on your price that you entered, if someone who bought shares at $21 and they're getting $2.37 a share and a monthly dividend, that's an 11% return in 1 month, and that's just because of Bitcoin and MSTR.
Crazy.
Yeah.
Is it a monthly dividend?
Yep, monthly dividend. It pays every 4 weeks. It's paid as low as $1.33 and as high as $4.41. And the $4.41 months were when we were in all-time highs, pushing 100,000 back in the winter.
Wow, I thought the near 5%,
go ahead.
I thought the near 5% I'm getting on my Bitcoin and Zest protocol was outstanding, but I guess I should take another look at some of these companies as if I am going to diversify, because that is a huge return. Obviously, that's not what you're buying MicroStrategy or Strategy now, but that's a tremendous return on investment.
Absolutely. And imagine if you buy at $20 and you're holding into the bull market and one of your monthly dividends is $4. That's a 20% return in 1 month in income.
Yeah, that's nuts. That's nuts. Huge shout out Stacking DAO, Bitflow, Zest Protocol, all the Stacks ecosystem, Velar, Arcadico. We see you. We really love guys that don't know. We are huge fans of the Bitcoin ethos, the decentralized, permissionless, trustless exchange ethos, censorship resistance, open source development, and with that, we are also very, very much supportive of the Stacks ecosystem, the leading L2 on Bitcoin. And on Stacks, there is real Bitcoin DeFi now available options to you. And they are just announced that they're opened up the SBTC cap, so you can actually now bridge in more Bitcoin to deploy into real Bitcoin DeFi on Stacks. And we have So many awesome partners: Alex, Velar, Bitflow, Stacking DAO, Zest, Granite. Who am I missing? Arcadico, Charisma DAO. Don't forget Charisma. Fact Fun got some swapping going on now. There's some really awesome stuff. There we go. Zest, DeOrganized Media. Don't forget us. Boom Wallet coming soon. We got tons and tons and tons of projects. By the way, shout out to Crypto Dude and BoostX. This is what you're looking at on screen right now. This is our homies Chrome extension called BoostX. It actually allows us to send Stacks, Bitcoin, and a bunch of other Stacks tokens and NFTs on Stacks to people directly on X on any post that they have, as long as they have a BNS name, which is the .btc. So huge shout out to the Stacks ecosystem and all of the players in our space, especially our sponsors, Stacking DAO and Bitflow, and all the rest. And Landy, what's up, man? How you been?
Good. Just taking a look at the Federal Reserve press release here quickly, and then poring over some of the data. And, just interested to hear what Powell is going to say, which I suspect is going to be echoing the same things that he said last time. So it's going to be interesting. In their statement, if you want to give me a second here, I can kind of read through it real quick. Says that although the swings in net exports have affected data, now net exports are the what they're referring to is the overwhelming imports in the first quarter that were coming in particular in January, February, and March in preparation for the implementation of tariffs in April. So the first quarter saw massive amounts of imports and increases in inventories and stuff like that, and of course a decrease in exports. So that is known as the net exports metric, and that's what drug down GDP and had it show a shrink, right? Negative 0.3%. So in this case, we were projecting some growth, but the imports really hammered things home that, many were front running the implementation of tariffs. But since then, the data has begun to shift, right? So we're starting to see that net export is shrinking, right? So we're getting less imports since then, month over month. And this is having a bit of an effect on kind of the view of things, but we also have some strong metrics that have been coming in terms of employment. Even more recently, on Monday, we had PMI services from ISM come out, show a 2.8% growth in employment. So we also had some reports at the end of April come out that indicated a growth in income and spending in the United States. And we saw that PCE, which is the primary number or metric underlying inflation, month over month stayed flat, meaning that we didn't see any further aggregate inflation. Now we are getting inflation in some sectors, but we're getting outsized deflation in others like energy. And I believe that energy is going to be a big focus of the export side of things. So, this all plays into what the Trump administration has been talking about, in particular, Bessent. And that is that we're looking at shrinking the trade deficit. So that might result in less imports, which is kind of the goal, and then more exports, or at minimum shrinking and reshoring American capital or dollars. So that's what we're seeing in markets. That's what we're seeing in the reports being, that are reflecting a lot of this. They went on to say, effectively, recent indicators suggest that economic activity has continued to expand at a solid pace. Unemployment rate has stabilized at a low level in recent months and has stayed there. Labor market conditions do remain solid. They're correct there. And inflation, while elevated, is not nearly as dire as many have made it out to be. Now we'll see what April's numbers continue to come out as. And the interesting part about this FOMC meeting and kind of in relation to when we had tariff implementation in the United States is that we're not going to get a lot of the data that they're going to want to see until later in the month anyway, right? So it kind of all pointed to them sitting on their hands this meeting and just looking towards the next quarter and the next meeting.
Yeah, that's what I got to. That's what I was expecting. It remains to be seen, even if he doesn't intentionally, people are going to take what he says and interpret it how they want to. So it'll still be interesting to see how the market responds after the press conference. As of right now, it's still pretty much flat from the announcement. It hasn't moved at all. At least I'm looking at crypto. I haven't looked at the other markets because, well, frankly, they don't interest me all that much anymore.
Well, but it's a funny piece. Yesterday, we had the Learn TA with Landy, right? And I played out a little scenario, and then we get off stream, and then it pumps right to the areas that I was talking about. I actually, lucky enough, I got into that trade too, because I was like, oh, you know what? This looks like it might actually do what I was talking about. All right, let's get in. And then all of a sudden, whoop, right up to the highs. Nice spike of them, a little rejection. Now we're kind of floating around. So
yeah, can we hold the 96? Can we hold this 96.5 level through the end of the week? That would be
interesting. Yeah, that would be interesting. What I'm obviously, as I had mentioned yesterday, I was looking for, in particular, that close above 95.128 on the weekly. And that would start to really, we got a nice move into that area. And in this case, we're looking at about $96,000 for continuation to test last week's high. What the danger is here for bulls is that they get trapped at the top of a range here and find themselves on the outside looking in as things kind of come back down for liquidity and try to set up that real reversal. So, I'm just stay cognizant of what's actually happening in the wider markets, because Bitcoin is moving with every little thing right now. And traditional players will definitely take advantage of positive and negative news to get where they want to go.
And there could be some dovish sentiment with Jerome Powell in this press conference. So even though interest rates remain stable, he could put some breadcrumbs out there during his press conference that could influence markets.
Yeah, it's going to come down to how he talks about it, realistically. Mm-hmm. I just got a new notification from TradingView. For some reason, all it says is your hub for global bond data. Really, they added some new features, apparently. No wonder it was chugging. Okay.
Got some new stuff. Yeah.
And for those that don't know, the best indicator on TradingView is Landy bands. If you don't have bands, you need to go to Landy's X page and go get it. It's a free indicator. It's all you need.
Hey, I appreciate that.
It actually is an awesome indicator, by the way. I'm not just saying that to be funny, although I did have obviously my delivery is just kind of goofy sometimes anyway, so it just comes off that.
I have a feeling that
I love the Landy band.
Yeah, did Landy's mic rug for a second?
Yes, it did. Sorry.
Okay. All right. Cool. Oh, I'm not crazy.
Yeah, I'm having. So yeah, it's funny. I actually took a little trip to the hospital yesterday, shortly after our stream as well. Got my lungs in, and then went to the hospital. So I've been trying to reset things here, like my computer.
What happened?
Huh?
You all right?
Yeah. I'm gonna be good. All good. Everything checked out. I'm good.
All right.
Had to
cool.
go get some Yeah, but unfortunately, it ended up being a very long day and long night. And then when I was on my way out the door, I realized that I ripped apart some of my setup because I was going to go set up in another room to do some things. And so as I'm like plugging things in, the microphone might rug here and there. My apologies.
What's up, Jackbinswitch in the house? How you doing,
Hey,
brother?
What's up, man?
Great panel. Good to see you, Landy, Shiflet, GP,
Hey,
Peace.
What's up, guys? What's up, Jack?
All right,
What's up, Jack?
this dildo still didn't cut rates, huh?
Yeah. Still keeping it flat, man. Keeping it unchanged. Let's see.
he's still doing some like shadow QE though with some of the activity I saw yesterday with the Fed
live?
injecting and stuff like that. So even though he didn't cut rates, they're still the Fed's up to something.
Is he live right now?
So, not
He
yet.
should be. If
Okay.
you, he's going to be walking out here in a minute.
Where's?
Yeah,
where
yeah,
y'all
he's
got-
talking.
Oh
Is
shit!
he?
Yeah.
I'm,
Yeah, he's on.
talking.
I got CNBC on the screen right now. He's talking.
Yeah, he's up there.
All right, hold on a second. Let me.
Boom,
Really?
boom,
No,
boom.
this isn't-
Let's hear what he got to say. Yeah, I just saw a clip on X, and I was like, "Oh, is it that time?" It's about
I'm on the Fed's website. I mean, the Fed's YouTube channel, and it's.
Can y'all shoot a link in the
This is
private
what-
chat?
Oh, hold on a second. Did I get delayed?
Rebounded from weakness in the fourth quarter.
Sorry, guys.
There we
Nice.
4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Total PCE prices rose 2.3% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up, as reflected in both market and survey-based measures. Survey respondents, including consumers and forecasters, point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of the balance sheet. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. The tariff increases announced so far have been significantly larger than anticipated. All of these policies are still evolving, however, and their effects on the economy remain highly uncertain. As economic conditions evolve, we'll continue to determine the appropriate stance of monetary policy based on the incoming data, the outlook, and the balance of risks. Based on the incoming data, the outlook, and the balance of risks. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It is also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the size of the term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we'll balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, We would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on inflation dynamics and the implications for our monetary policy strategy. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference next week. Throughout this process, we're open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Now when things
Steve
actually
Leishman,
will
CNBC.
get
Thank you, Mr. Chairman, for taking my question. A lot has happened since the last meeting. There's been tariffs put on, tariffs taken off, and meanwhile, there's a bill advancing in Congress. And I just wonder if I could press you on the last part of your statement. Are you any closer now to deciding which side of the mandate is going to need urgent care first?
Well, so as we noted in our statement, post-meeting statement, we've judged that the risks to higher employment and higher inflation have both risen. And this, by the way, of course, is compared to March. So that's what we can say. I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out, and also when they do settle out, what will be the implications for the growth and for employment. I think it's too early. So, I mean, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. I think if you look where we are today, we have an economy that, if you look through, the sort of distortions in Q1 GDP, you've still got an economy that looks like it's growing at a solid pace. The labor market appears to be solid. Inflation is running just a bit above 2%. So it's an economy that's been resilient and is in good shape. And our policy is sort of modestly or moderately restrictive. It's 100 basis points less restrictive.
Turn them down a little bit so we can do commentary maybe.
And so
say that again, Landy.
That leaves us in a good place to wait and
So,
see. We don't think we need to be in a hurry. We think
when
we
he's
need
talking
patience.
about
We're going to be
distortions, he's
watching the
talking
data.
specifically
The data
about
may
the
move quickly or
net
slowly,
exports
but we
metric,
do think
where
we're
we
in a
had
good
massive
position where
amounts
we
of
are
imports.
to let things evolve.
And if not for the massive
and
amount of
become clearer in
imports,
terms of
which
what
are
should be the
calculated into
monetary policy
GDP,
response.
some argue that they shouldn't be, but they are calculated because that's money being spent, right? That does affect, price and cost here.
But there are some who argue that
And there
the
is,
situation has no differences, energy
because
costs
of
are
that,
down,
it
housing
drugged the
balances
report
look
down,
nothing
but
like they
we
did
would have
4
been on
years
solid
ago.
growth,
Labor demand appears to be
if that was not the
gradually
metric
making
that was
its way
being
to
counted. So
below
it's a temporary
4%.
metric.
What do you see right now
He knows that it's gonna
that could
shrink.
nourish higher inflation beyond a rise in goods prices this year?
I think the underlying inflation picture is good. It's what you see, which is inflation now running a bit above 2%. And we've had basically services and non-housing services, which is a big part of it.
Yep.
So that part, I think, is
He's not taking their bait, by the way.
is moving along well. But there's just so much that we don't know. I think, and we're in a good position to wait and see, is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing. And, we'll see. The administration is entering into negotiations with many countries over tariffs. We'll know more with each week and month that goes by about where tariffs are going to land, and we'll know what the effects will be when we start to see those things. So we think we'll be learning. I can't tell you how long it will take, but for now, it does seem like it's a fairly clear decision for us to wait and see and watch.
That you don't need to be in a hurry. Does that mean that could the outlook change in such a way that a change in your stance could be warranted as soon as your next meeting?
As I said, we are comfortable with our policy stance. We think we're in the right place
What an
to
uncomfortable
wait and
question
see
to
how
ask.
things evolve. We don't feel like we need to be in a hurry. We feel like it's appropriate to be patient. And
He's
when
what he's
things
trying to get
develop,
him to do
of
is
course,
commit to
we
cuts
have a
next
record
quarter
of
or next
we can move
month,
quickly
the
when
beginning
that's
of the quarter.
appropriate. But we think right now the
I
appropriate
thought the
thing to
signal
do
was,
is
hey,
to
we're not
wait
in a
and see how
hurry.
things evolve.
And
There's so
then
much uncertainty.
the
If you talk to businesses,
underlying
market
message was, hey,
participants,
we'll just
or
wait till next month.
forecasters, everyone is
Yeah,
just
essentially.
waiting to see how developments play out, and then we'll be able to make a better assessment of what the appropriate path for monetary policy is. So we're not in that place, and as that develops, and I can't really give you a time frame on that.
Janelle Marte with Bloomberg. So many economists have been pricing in higher odds of a recession, and several are noting that it is more difficult for the Fed to cut rates preemptively given the higher risks for higher inflation. So given the outlook, do you still see a path for a soft landing, and what does that look like?
A soft landing.
Well, let me say, I mean,
Man, that thing's been
let's-
up in the
let's-
air
let's
waiting to
look
land
back
for so
and
long.
see where we are. So
These idiots.
go through 2024 up to the
What a
day.
dumb
we've
fucking
had
question.
unemployment
So
in the low
stupid.
fours for more than a year. We've had inflation coming down now in the mid to low twos. We've had an economy growing at 2.5%. So that is the economy as we see it now. What looks likely, given the scope and scale of the tariffs, is that we will see certainly the risks to higher inflation, higher unemployment have increased. And if that's what we do see, if the tariffs are ultimately put in place at those levels, which we don't know, then we won't see further progress toward our goals. But we might see a delay in that. I think in our thinking, we would never do anything but keep achieving those goals. But we would, at least for the next, let's say, year, we would not be making progress toward those goals. Again, if that's the way the tariffs shake out. The thing is, we don't know that. There's so much uncertainty about the scale, scope, timing, and persistence of the tariffs. So that's that. In terms of preemption, I think you can look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive. If anything, it was a little late. But 2019, we did cut 3 times. But the situation was you had a weakening economy and you had inflation at 1.6%. So that's a situation where you can move preemptively. Now we have inflation running above target. It has been above target for 4 years. It's not so far above target now. And we have an expectation, conditional on what happens, that we'll see upward pressure on inflation. If you look at where forecasters are, they're all forecasting an increase in inflation. So it makes it, and then we've also got forecasts of weakening in the economy, and some have recession forecasts. We don't publish a forecast about that. We don't publish a forecast that assesses how likely a recession is. But in any case, it's not a situation where we can be preemptive because we actually don't know what the right response to the data will be until we see more data.
Colby Smith with the New York Times. How much weakness does the committee need to see, though, in the labor market and the economy more broadly to lower interest rates again? Is it about a certain increase in the unemployment rate over a period of time, or perhaps a certain
So funny listening
number
to
of
them
negative
and their
monthly
dumb
job
questions.
reports? I mean, how are you making that assessment?
Unemployment from March
So,
to April
first of all, we don't
in
see that yet.
manufacturing
We have 4.2%
rose by
unemployment, good
1.8%.
participation, wages behaving very well. participation
Employment
at a good level. So
in
with the
services
labor
rose
market,
by
we would look at the
2.8%.
totality of the data. We'd look at the level of the
Hospital
unemployment rate. We'd
services,
look at the
employment
speed with which
rose
it's changing.
by
We would look at the whole huge
3%?
array of labor
Almost
market data
3%.
to
Let me
to
look
get
here.
a sense of whether conditions
The
are really
report's shitty,
deteriorating
so
or
hold on.
not. And at the same time, we'd be looking at the other side of the mandate. We could be in a position of having to balance those two things, which is, of course, a difficult balancing judgment that we'd have to make.
On that point about balancing, I mean, you've mentioned that the committee would consider how far the economy is from each goal and the time it would take to kind of get back to that point. But what does that mean in practice? I mean, how much of that assessment will be rooted in a forecast versus data dependence?
It would be a combination of the two. I mean, let's just say this would be a complicated and challenging judgment that we would have to make. Yeah, we're not in this situation, but the situation is if the two goals are in tension, so let's say that unemployment is moving up in an uncomfortable way, and so is inflation.
We moved
Not
from
the situation
49,
we're in,
it was 4%
hypothetically,
increase in
but we
employment
would
in
look
hospital.
at how far they are from the
So,
goals, how far they're expected to
yeah,
be from the
we have
goals, what's the expected
stable
time to get back to their
employment
goals.
numbers.
We'd look at all those things and make a difficult judgment, and that's
In
in
fact,
our framework. It's always
moving
been in our
from
thinking.
contraction to slowing
we haven't
contraction
faced that question in a very
on
long
employment.
time. So again, difficult judgment to make, and not one that we face today, and we may never face it, but we have to be keeping it in our thinking now.
They're fishing for gotcha questions, by the way.
Thank you. Edward
I'm
Harris
I'm
with
doing
Fox
journalism.
Business. So we had the CPI report that came out that showed month over month the first decrease in inflation in about 3 years. The jobs
Thank
report
you.
said solid that we saw. At the same time, we have those new tariffs that we're living under.
Thank
So
you, Edward.
Given this, should the Federal Reserve be cutting rates at all this year?
It's going to
the
depend.
other
And I
direction.
think you have to just take a step back and realize this is why we are where we are. We're going to need to see how this evolves. There are cases in which it would be appropriate for us to cut rates this year. There are cases in which it wouldn't, and we just don't know until we know more about how this is going to settle out and what the economic implications are for employment, for inflation. I couldn't confidently say that I know what the appropriate path will be.
So following on that, so then how does President Trump calling on you personally, as well as the Federal Reserve, to make rate cuts affect your decision today and affect your job difficulty?
Doesn't affect doing our job at all. So we're always going to do the same thing, which is
He
we're
took a
going
good thing and
use
tried
our
to twist it
tools
into
to
a bad
foster
thing.
maximum employment and price stability
Yeah.
for the benefit of the American people.
orange
We're always
man
gonna
bad.
Consider
Ed-
only
Edward
the economic
was,
data,
uh,
the
But
Trump
outlook,
said-
the balance of risks,
Fishing.
and that's it. That's all we're going to consider. So
Fishing.
it really doesn't affect either.
It's a fishing expedition because he even conceded that inflation is down.
Hi,
and
Howard
flat
Stein
month
with
over
Reuters,
month,
and,
so he was
thanks for the
wrong.
time. I'm wondering, I mean, given the complexity about the first quarter GDP and what lies ahead, I'm just wondering
Came
what
in
your
under the
intuition
month
tells
before.
you about
Flat
the
last month.
underlying direction of the economy right now. Many of your colleagues
Employment
have
is
said
up.
they feel growth is slowing. If so, do you have any sense of by how much, to what degree the slowdown may be? What does your gut tell you about how things are evolving out there?
My gut tells me that uncertainty about the path of the economy is extremely elevated, and that the downside risks have increased. The risk is, as we pointed out in our statement, the risks of higher unemployment and higher inflation
To
have
the
risen.
person asking about Dixie, it's probably
but
going
they
to
haven't
bounce on the
materialized
weekly
yet.
again
They
soon.
they're not really not in the data yet.
Doesn't rule out further
So
downside though.
that
in the
tells me
meantime.
more than by intuition, because I think it's obvious actually that the right thing for us to do is we're in a good place. Our policy's in a very good place, and the right thing to do is await further clarity. And there's usually things clarify and the appropriate direction becomes clear. That's what usually happens. Right now, it's very hard to say what that would be. In the meantime, the economy is doing fine. Our policy isn't, it's not highly restrictive. It's somewhat restrictive. It's 100 basis points less restrictive than it was in, last summer. So we think it's in a good place, and we think the appropriate thing is for us to wait and see and get more clarity about the direction of the economy.
Well, let me press you on this idea of the economy being fine right now, because reading the Beige Book very closely the last time around, there was a lot of negative stuff, negative sentiment that was in there. And I know that everybody's looking at soft data right now. You mentioned it yourself that the sentiment's sour. But the Beige Book was talking about, the beginnings of layoffs in some industries, prices rising in some places, and an awful lot of investment decisions being pushed to the sideline. Doesn't that point to a slowdown?
It may well. It just hasn't shown up yet. And we all look at all these sentiment and read many individual comments just to get a better feel. And businesses and households very broadly are concerned and postponing economic decisions of various kinds. And yes, if that continues and nothing happens to sort of alleviate those concerns, then you would expect that to begin to show up in economic data. It wouldn't maybe show up overnight, but it would show up over weeks and months. And that may be what happens, but it hadn't happened yet. And also, there are things that can happen that will change that narrative. I mean, they haven't happened, but it's possible to imagine things that. But in the
What's going on, Powell? You're buffering.
Buffering Powell.
Somebody
else got pulled up.
Yeah. Well, here's the thing. A lot of what is being asked. Look, we have all the data
extremely carefully, like everyone is, but don't see really much evidence of it in the actual economic data yet. And by the way, consumers keep spending, credit card spending. It's it's still a healthy economy, albeit one that is
Credit card spending, healthy economy,
shrouded in some very downbeat sentiment on the part of people and businesses.
Michael McKee from Bloomberg Radio and Television. The Fed's been criticized recently by a former governor for what he calls mission creep. You take on more problems, use more tools, and then end up building tools to deal with the fallout of those tools, which then makes it a given that you will act more aggressively in the future. Is that a fair critique, and is that something you would be looking at in your framework review?
Sorry, say the critique again.
That the Fed has been involved in mission creep, gets involved in using too many new tools to deal with problems and to go too far. Is that something that the critique was based around the fact that you did QE and QE and QE and went beyond the narrow confines of your mandate?
So, well, I mean, there are a couple. That's not really beyond the confines of our mandate. I would say this: we did things. Essentially, we were on an emergency footing for a couple of years in the pandemic.
Pandemic. You were saying the pandemic
And
word.
it's very fair and very welcome for people to look back over what we did and say, hey, you could have done this better and different. And one thing we hear a lot is we could have explained QE a little better. We did think we were explaining it in real time. I completely accept the thought that we could have explained it better. There's a lot of thinking that we went on too long with QE. I can tell you
switch over to mine.
The reason we did was we were concerned
let me see if
that we didn't want
audio
a sharp tightening in financial conditions at a time when we thought the economy was still vulnerable. Really very little on climate. You can say that little bit that we've done was too much, but I wouldn't want to give any impression that we've taken climate in as something that we're spending a lot of time and energy on. We're not. We have very, very narrow things. We did one guidance for the banks, and then we
not hearing it.
Stress analysis, climate stress.
Not hearing it.
The network for greening the financial system. So we didn't do much on climate, but I do think, and I've said this publicly several times.
Stupid climate spending shit.
It's a real danger for us to try to take on a mandate like that, which is very narrow application to our work. And the risk is if you go for things that are really not in your mandate, then why are you independent? And I think that's a very fair question. I do think we've done a whole lot less on climate than some people seem to think we did. Anyway, that's what I think.
Should you have taken on the question of bringing unemployment rates down for specific categories?
We didn't do that. What we said was that we never targeted any unemployment rate for individual racial or demographic groups. What we said was that maximum employment was a broad and inclusive goal. And I think what we meant by that was we're going to consider the totality of the country as we look at our maximum employment goal. Of course, we were never going to target any individual group with that, but I think some people
I do that.
there we go. That's not at all what we meant. So that's just
Your reaction, GP?
I can see how maybe people found that confusing, and we have to take that into consideration.
Juggling.
Hi, Chair Powell. Thanks for
Kinda
taking our
hack
questions
Albert in
today.
this.
I'm Jolene Kent with CBS News. You've said wait and see, and the economy is doing fine today, but the impact of tariffs are already showing up at the ports. Businesses, big and small, are telling us that they feel it, and most importantly, consumers say they feel it. That the challenges
Consumers are feeling
here,
the tariff.
and there's no waiting and
They
seeing.
said they were
For Main
taking
Street,
polls saying
what
that
is
consumers
the
were
breaking
feeling
point?
it before
What would
the
have to
tariffs
happen
even went into
to prompt
effect.
a rate
Give me a
cut
break.
specifically?
I'm really feeling these tariffs as a consumer.
Yes.
Can you feel it yet?
We
Yeah.
really don't
Is
see
it in
the
yet?
data yet.
can
big
feel it in my
economic effects.
plums,
We see sentiment, their concerns that higher prices may be coming or things like that. So people they're worried now about inflation. They're worried about the
It's a difference
a shock
between
from the
reality
tariffs,
and
but they really
perception.
haven't. That shock hasn't hit yet.
And CBS is trying to paint a perception as a reality.
At the not just the sentiment data, but also the real economic data, as we assess what it is we should do. And remember, there would be two effects. One of them would be weakening economic activity, which translates into higher unemployment, and the other would be potentially higher inflation. Again, to say it again, the timing, the scope, the scale, and the persistence of those effects are very, very uncertain. So it's not at all clear
She
what
looks
the appropriate
perturbed by this
response to
answer.
monetary policy is at this time. And and by the way, our policy is in a good place, so we think we can wait and move when it is clear what the right thing to do is. Really not at all clear what it is we should do. So
They know
people are
exactly
feeling,
what they're going to do.
stress and
Give me a break,
concern,
Paul.
but
Come on.
Unemployment hasn't gone up. Job creation is fine. Wages
Well,
are
they're
in
not
good shape.
sure. It depends on what happens between now and
people are not
when
layoffs,
we're
or
gonna
people are not
actually
getting
do it.
laid off at high levels. Initial claims for unemployment are not increasing, in any kind of impressive way. So
You kind of slapped
the
her down.
economy itself
actually
is
great.
still, in solid shape.
Just a quick follow-up. President Trump now says he does not plan to remove you as chair. When you heard that, what did you think?
I don't have anything more for you on that. I've
Not
pretty
good,
much
right?
covered that.
Powell's like,
Thank you.
yo, don't fall for. I'm not falling for this shit.
Right. Well,
I
you already
literally
said that.
just talked to
thank you.
Bissent on Monday.
Chris Gaber, Associated Press.
Can't be fired.
Well, I just wanted to follow up.
Can't
Earlier,
fire
it sounded like you said it was unclear how the Fed.
Oh, the Associated
what
Press,
kind of interest rate
the
decisions you will make later
Soon
this
to be
year. So does
defunded.
that-
Associated Press.
in March, there was guidance that 2 cuts might happen. 2 cuts were penciled in for this year. Is that
Associated
now
Is
that
AP
guidance from the last press
public-
conference? Has that been
publicly
overtaken
funded?
by
He's
events
AP.
at this point?
We don't do a summary of economic projections at every meeting, as you know. We do it every other meeting, and so this was the meeting when we didn't do it. We don't also kind of poll people, so I really wouldn't want to try to make a specific projection for where we are relative to that. We will, in 6 weeks, we had the June meeting, and you'll have another SEP. I'm not going to hazard a guess here today as to what it would be. Again, what I would say is that we think our policy rate is in a good place. We think it leaves us well positioned to respond in a timely way to potential developments. That's where we are. And that, depending on the way things play out, that could include rate cuts. It could include us holding where we are. We just are going to need to see, how things play out before we make those decisions.
Great. And just to follow up on that, I mean, when you address the issue of how the Fed would handle both rising unemployment and rising inflation, how are you thinking about the fact that addressing one could exacerbate the other? So a rate cut to reduce
They've never
unemployment
thought
and
about
worsen
it, not
inflation and
once,
vice versa?
ever.
If you look up the word
how do
weenie
you
in the
handle those,
dictionary, it's
challenges?
this
You
guy.
just captured
Look at
this is
him.
the issue with
Do I look
two
that
goals
stupid
being
when I
in
put my
tension. It's a
glasses
very
on my head?
challenging question.
You
Now,
couldn't
there
look
can be a
that
case in which
stupid
one
if
goal
you
is very
got
far.
stupid tattooed on your
One
forehead.
variable is very, very far from its goal, much farther than the other. And if so, you concentrate on that one. And frankly, that was the case.
Turning up my microphone to talk over
It wasn't a case
everything.
where they were really in tension. But if you
That
go back to
guy
2022, it was
is an
very
idiot.
clear that we needed to focus on inflation. The labor market was also super tight, so it wasn't really a trade-off. You know, I think you know what our framework document says. It says we'll look at how far each variable is from its goal, and also we'll factor in the time it would take to get there. So, you know, that's going to be potentially a very difficult judgment. But the data could break in a way that it's not. You know, I just don't think we know that. The data could easily favor one or the other.
He's
And
being very,
right
very
now,
clear
There's no need to make a choice.
that
and
we need to see the
and
rest
no
of
real
the
basis
data
for doing so.
this month. My microphone just adjusted down.
Hi, Victoria Guido with Politico. I wanted to ask, Congress is currently debating spending cuts alongside extending the tax cuts. And I know you've talked many times about how the path of the debt is unsustainable, but given that we're also talking right now about the economy slowing, potentially even recession, I was just wondering, is there a danger
Not
that
what he
spending cuts
said.
now could slow
Literally.
growth a lot more?
You know, we don't give Congress fiscal advice. They're going to do. We take what they do as a given, and we put it in our models and in our assessment of the economy. So I wouldn't want to, speculate on that. I mean, I think we do know that the debt is on an unsustainable level, on an unsustainable path, not at an unsustainable level, but an unsustainable path. And it's on Congress to figure out how to get us back on a sustainable path. And it's not up to us to give them advice.
Well, do you think that they should take macroeconomic conditions into account as they look at this?
I think they don't need my advice and our advice on how to do fiscal policy any more than we need their advice on monetary policy.
Andrew.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. In your Jackson Hole
Wapo.
comments last year, you said you would not welcome further cooling in labor market conditions. The unemployment rate then was 4.2%, which is what it is now. Many forecasters now predict a higher jobless rate. How has your tolerance for weakening labor market conditions changed compared to a year ago?
Show me the
So it was
forecasters.
quite a different situation. What was happening last year is that over the space of 6, 8, 7 months, the unemployment rate went up by almost a full percentage point. And it was click, 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 click each month. And everywhere people were talking about downside risks to the labor market. At the same time, payroll job numbers were getting softer and softer. So there was a really obvious concern about downside risk to the labor market. And so at Jackson Hole and then in September, we wanted to address that forthrightly. We wanted to show that we were there we'd been there for inflation for a couple of years, and we wanted to show also that we're there for the labor market. And it was important that we send that signal. Fortunately, since then, the labor market has really, and the unemployment rate have really been moving sideways at a level that is, well in the range of mainstream estimates of maximum employment. So that concern has gotten a lot less. So, you're at 4.2% unemployment. I think we were in a very different situation. Now we have a situation where, the risks to higher inflation and higher unemployment have both gone up, as we noted in our statement, and we've got to monitor both of those. We actually have a potential situation where there may be a trade-off or tension between the two, potentially. We don't have it yet, and we may not have it, but that's what we have, and that's why I think it's a very different situation.
I guess I want to follow up by asking how much of a rise in the jobless rate you could tolerate.
Yeah, I can't give you I'm not going to try to give you a specific number. I'll just say we have to now be looking at both variables and which of them is
literally
if one of them
the
is
only
demanding
two
our focus
variables
more than the
that
other,
matter to them.
That would tell us what to do with policy. If they're more or less equally distant and equally or not distant,
unemployment
then we don't
and
have to
inflation.
make that assessment.
Their
The assessment
freaking
is
mandate.
you wait. So I'm not going to try to be really specific about what we need to see in terms of a number, but If we did see, significant
Yeah, of course,
deterioration in
come on,
the
I
labor market,
need
of course,
this.
that's one of our two
can't get any
variables, and we would
pussy at
look to be
all.
able to support that.
My life
You'd hope that
sucks.
it wasn't also
Nobody
coming at a
likes
time when
me.
inflation
Just
was
give me
getting
something that
very
I can
bad.
print
And
that's
again,
bad.
we're speculating here.
Yeah,
We don't know
that's all
this.
they're
We don't know
fishing
any of
for.
these things. It's very hypothetical. We're just going to have to wait and see how it plays out.
Thanks.
Claire Jones, Financial Times. In terms of getting some clarity, we've got some talks at the weekend in Geneva between the US and China. A lot of economists are attaching an awful lot of importance to what we hear from those talks. How much importance are you attaching to them in terms of judging what will happen to the US economy going forward? And just in a similar vein,
Talks don't matter, the deals
some
do.
economists are saying it's days, not weeks, that we have until we start to put the US economy at risk of seeing the sort of pandemic era shortages and higher
They're
prices.
really ratcheting you up.
If we don't kind of
Inventories
soothe
are
relations
fine,
between
bitch.
the US
What are
and
you
China.
talking
We're all
about?
gonna
Good to have your
die.
view on that too.
So,
Pandemic
these are not
era shortage.
talks
I
that
hear
we're
that
in any way
everywhere
involved in,
the
so I
past
really
week.
can't comment
Fucking
directly
ridiculous.
on
I mean,
it.
no
So look at the
fucking
data.
toilet
Is this,
paper.
We had, coming out of the March
ridiculous.
meeting, the public generally had an assessment.
Literally
of where
just a
tariffs were going,
narrative
and then
that
April 2
ignores the
happened, and
data.
It was really substantially larger than anticipated in the forecasts that I had seen and in our forecasts.
Import.
So,
Thank you.
And now we have a different, we're in a new phase where it seems to be we're entering a new phase where the administration is beginning talks with a number of our important trading partners, and that has the potential to change the picture materially or not. And so I think it's going to be very important how that shakes out. But we simply have to wait and see how it works out. It certainly could change the picture, and we're mindful of not trying to make conclusive judgments about what will happen at a time when the facts are changing.
Just on the fall in shipping volumes from China over these tensions, I mean, do you share that concern that we could start seeing goods shortages and higher prices in the coming weeks if this isn't resolved very quickly?
I don't want to get we shouldn't be involved even verbally in the questions about the timing of these things. Yes, of course we follow all that data. We see the shipping data, we see all that, but ultimately this is for the administration to do. This is their mandate, not ours. And I know as you can see, they're again beginning to have talks with many nations, and that has the potential to change the picture materially. So we'll just have to wait and see.
Kosuke Takami with Nikkei. Thank you for doing this. The volume of imported goods increased significantly in the first quarter. Do you think that this situation could cause a delay in the impact of tariff on inflation? And does this mean that it will take longer time to reduce uncertainty?
The decision we made today? Which decision?
So the future decisions. So the volume of the imports, imported goods increased significantly. So the impact on the imported inflation may delay.
Dude behind them is struggling.
What is the impact to your future decision?
Okay, so I mean, I think we think that there was a big spike in imports, right? Very big, historically large, really, and to beat tariffs. And now that should actually reverse, so that it's the difference between it's exports minus imports. So and imports were huge, and so that it conveyed a very negative contribution to U.S. GDP, annualized GDP in the first quarter, as we all know. So that could, in the second quarter, be reversed, so that we have an unusually large contribution to usually positive. That's very likely as imports drop sharply. You could also have, very likely you'll have restatements of first quarter. It'll turn out that consumer spending was higher. It'll turn out that inventories were higher, and so you'll see those data revised up. it may actually go into the third quarter too. And so I think this whole process is going to a little bit make it harder to make a clean assessment of U.S. demand. I mentioned private domestic final purchases, which doesn't have inventories government or inventories government. Anyway, it's a cleaner read on private demand. But that too probably was flattered a little bit by by strong demand for imports to beat tariffs. So that might overstate. It's a really good reading, 3% PDFP in the first quarter. That might actually overstate. So it's not really going to, I don't think it's going to affect our decisions. I will just say, though, that it's a little confusing, and it's probably less confusing to us than it would be to the general public as we try to explain this. It's complicated, and GDP is sending a signal, PDFP is sending a signal. It's a little bit confusing, but I think we understand what's going on. It's not really going to change things for us.
He really needs to get on with the GPSC signal.
Brown
That's what
from
I'm saying.
Axios. I guess, we talked about some of the indications of potential layoffs, price hikes, an economic slowdown, all being evident in the soft data. I'm curious why the Fed needs to wait for that to translate into hard data to, make any type of monetary policy decision, especially if the hard data is not as timely or might be warped by tariff.
One of the reasons I never got
effects.
red rimmed glasses was because I wouldn't be able to wear them with a purple shirt, but there she is.
I mean, look at the state of the economy. The labor market is solid, inflation is low.
You got to
We can afford
remember
to be
that
patient as things
purple
unfold.
is
There's no real cost to our
the
waiting
color
at
of
this point.
royalty, so she's trying to be
Also, the
press
sense of-
royalty
the sense
right
of it
now.
is, we're not sure what the right thing will be. There
And she's
should
wearing
be
red,
some
so
increase
she's
in
out for
inflation.
blood.
There should be some increase in
You should come to
unemployment. Those call
DeOrganized.
for different responses. And so until we know,
Fast track to
potentially
becoming
call for
press
different
royalty.
responses. And so, until we know more, we have the ability to wait and see. And it seems to be a pretty clear decision. Everyone on the committee supported waiting. And so that's why we're waiting.
Just a very quick follow-up. There was this sort of vibe session, if you will, where the sentiments expressed in
They
soft
vibe
data
coding?
did not translate
Vibe
into
coding.
the hard economic data.
Vibe
How are you thinking about that when interpreting some of the signs in the softer survey data?
Yes.
I
Okay,
think
so
going
that was
back
actually a decent
a number of
question.
years, the link between sentiment data and consumer spending has been weak. It's not been a strong link at all. On the other hand, we haven't had a move of this, speed and size. So it wouldn't be the case that we're looking at this and just completely dismissing it. But it's another reason to wait and see. You're right, though. We had a couple of years during the pandemic where people were saying just very downbeat surveys
wrap
and
it
going
up,
out and
guys.
spending
Wrap
money.
it up. Come on,
So that can happen. and
Wrap it
that
up.
may happen.
I
to
actually want to
some
run you
people.
guys
just
through
don't
the
know.
actual
This is an
economic data
outsized
because everybody
change in
LARPs
sentiment, though,
online.
and
You
so
see
none
all
of
these
us
big
is looking at
accounts
that just
LARPing
and
as
saying that
like
we're sure one
macroeconomic
way or the
experts.
other.
I'm going to show you guys the
We're
real
not.
numbers.
Oh yeah, we're definitely.
They
Plus,
were
don't they
India
know that
and
they're?
Pakistan experts.
Thanks,
They-
Chair
Don't they
Powell.
know that the
CNN.
building on Bitcoin?
So you mentioned
space
earlier that
Zip
you're
flow is going on
monitoring
right now?
the
Come on,
shipping
we got a
data,
place to
and
see here.
have seen
Come
in
on
shipping
now.
data that imports from China into the Port of Los Angeles have plunged, and that has raised concerns about potential shortages. What tools, if any, does the
plunged
Fed have to
because
ensure
they were
that
over
prices
importing in the
and
first
inflation
quarter
expectations
to
don't
get
get out of
stocks
hand
full?
if tariffs do
These
cause
people-
significant supply chain disruptions?
They're just trying to paint a
I mean,
narrative.
we don't have, the kind of tools
Whatever
that are
data
good
they can
at
draw
dealing with
through
supply
do
chain
so,
problems.
is
We
all
don't
they
have that
need.
at all. That's a job for the administration and for the private sector more than anything.
Yeah.
What we can do with our interest rate tool is we can be more or less supportive of demand, and that'd be a very inefficient way to try to fix supply chain problems. But we don't see the inflation yet. We're of course reading the same stories and watching the same data as everybody else, and right now we see inflation kind of moving sideways at a fairly low level.
If I could follow up on that, President Trump has indicated that he will likely name a replacement for you when your term as chair expires next year. But Your position on the board runs through January 2028, I believe. Would you consider remaining on the Fed board even if you're no longer chair?
So I don't
He's
have
like
anything
100
for you
years
on
old.
that.
Let him
My
retire.
whole
Look at
focus
him.
is on, and my colleagues' focus is all,
Right.
on
Retired.
you
He
know,
goes and works
trying
for a
to
Bitcoin
navigate
company.
this tricky passage we're in right now, trying to make
It's
the
like,
right
you know what? Fuck
decisions. You know,
this.
we want to make the best decisions
Making the
for
transition
the
to
people that we
Bitcoin.
serve. That's what we think about day and night, and this is a
There's a
challenging
way of orange
situation, and
pilling.
that's
It's the way that
100%
the
of our
money is
focus
ran
right
in
now.
this country and other countries. Like, it's just this shit's stupid. Like, I'm just gonna
Chair
stick to
Powell,
a monetary
Jennifer
policy
Schonberger
that
with
goes
Yahoo
out to the
Finance.
year
Public
2140
records
instead.
of your schedule so far this year show no meetings with President Trump. Past presidents Obama, Bush, and Clinton have all met with Fed chairs, and you met with Trump during his first term. Why haven't you asked for a meeting yet with the president?
He's very distressed
I've
over
never
this.
asked for a meeting with any president, and I never will. It's not, I wouldn't do that. There's never a reason for me to ask for a meeting. It's always been the other way.
So would you want to meet with him if given the opportunity to get more information?
It's never an initiative that I take. It's always an initiative. I don't think it's up to a Fed chair to seek a meeting with the president, although maybe some have done so. I've never done so, and I can't imagine myself doing that. I think it's always comes the other way. A president wants to meet with you, but that hasn't happened.
And if I could just ask one question on monetary policy. When it is time to cut rates, how will you determine how far down rates will have to come to try to keep a balance on the inflation mandate as employment weakens?
You're not going to give you an answer.
I think once you have a clear direction, you can make a judgment about how fast to move and that
The
kind of thing.
non-answer.
So it's really the harder question is the timing, I think, and when will that become clear? And fortunately, as I mentioned, we have our policy in a good place, the economy's in a good place, and it's really appropriate, we think, for us to be patient and wait for things to unfold as we get more clarity about what we should do. Thanks very much.
Okay, I'm going to stop sharing this, and then I'm going to switch real quick, and I'm going to run you guys through something.
Let's do it.
Let's do it.
Because it's kind of nonsense. Obviously, it's always supposed to be nonsense, right? Some of the questions that they're asking. But one of the key things that we keep coming back to that I'm going to share here is the GDP, and there was some numbers last month that I was talking about with you guys and many others on Spaces events. We had numbers that came out prior to GDP on the 30th, right? And one of the big ones was personal income. Obviously, we had international trade in goods and services that were earlier, but it was personal income was one of the readings that we were looking for. Right. And the outlays there for personal income saw that from February to March that we did have some softening. But we were up in terms of the outlays from the prior period. So we had a beat in terms of personal income and personal spending. So if you look here,
that's year over year.
This is going to be, year over year metrics. Month over month, we were actually up. In fact, let me go look at my numbers real quick here. I'll share this screen. I can switch on my side here. Let me go ahead and share this with you. All right, let's get this in position. And we're going to go ahead and say only future events. Nope, we're going to go for the full slate. All right, so share this tab instead. Let's make sure that's popping up for you guys as well. Now, the audience can't see this, but on the 29th, we had JOLTS, and then on the 30th, we had personal income spending month over month was up from the forecast and the previous metric by 0.2%. We had personal income was forecast to decrease. It did decrease month over month, but it did not decrease to the level. So it was a beat in terms of expectations. And then we have core PCE down here, which is the main inflation metric that is tracked. and it was forecasted to go up 0.1%. It had previously gone up 0.5%, and it actually went down 0.5% and came in at 0. So inflation stalled or fell flat. And this is kind of what he's talking about. So we have income and spending are up, which are the primary drivers behind GDP, by the way. So while they've been kind of floating back and forth between contraction and expansion, or contraction and growth, generally speaking, since the rate cuts, it has been on the growth path. Along with that, last summer we saw a growth path for core PCE, which was inflation from Q3 to Q4, which is why I was calling out Q1 to Q2 for a crash of some, or a top, or a economic uncertainty period, right? And let me grab that real quick for you, because I actually made my own report to this. There's not enough bars and graphs for me, but I made my own. Let me see if I can find that report. Nope. We have economic numbers. Here we go. GDP. So this was just a quick report, just so that I can kind of outlay. I sent this to somebody who had a bunch of questions for me in DMs, basically. And what this is we came in negative 0.3% after, we did see some growth, Q2 to Q3, some fairly small growth of 0.1% quarter over quarter, and then we saw it tank down. So we saw the actual negative side from quarter to quarter start to hit from Q3 to Q4. And what's interesting about what just happened in the real contributions from Q1 is you see this imports number massively down. You see government spending down as well, which is fairly rare, by the way. Usually to buffer the amount of imports, which does have a negative impact on net exports, right? So it's a total between exports over here and imports gets you your net export numbers. That was what dragged GDP down. Typically, what the government will do ahead of a big event like this is they will spend, right? So you'll see this bar over here, which will soften this number here and still show some growth, even if it was declining. We didn't get that because what did they do? Immediately, Trump administration in Q1, as when they got in, they started cutting, right? And didn't introduce any new big spending, right? And then, of course, we had the front running all the way through, which, by the way, was just Q1 because the tariffs didn't start until Q2. So we saw everybody front running on the import side of things. Now, this is reflected. This is kind of a composite number. When we start getting into some of the income changes and spending habit changes, we had goods and services increase. This is in terms of spending. So we had massive amounts of spending on motor vehicles and parts. That was a huge jump. Then we had services kind of tick up for food, housing, utilities, healthcare, and stuff like that in terms of spending, aggregate spending. Now, remember, this isn't price inflation. This is spending. So people are willing to spend. And what did we see tank at the same time? Gasoline and energy goods tanking. So energy just going down. And what does that do? That actually has a positive impact on the entire supply chain here in the United States. If you bring energy prices down, that affects the entire supply chain. It also affects just you at the gas pump or your electric bill. And it takes a little while for those things to make their way to us as consumers. But on the business side of things, the immediate impact is that supply chain cost goes down. Very large operational costs for electricity goes down as well. And that's actually fits into what the Trump administration is trying to do with things like AI, right? And building out AI infrastructure here in the United States. The other big one, when looking here, of course, this is the full GDP report. They just, they were showing essentially real GDP change, and what tanked it. It was imports versus exports. I don't like their chart is just too small for some people. But we saw inflation coming down. right? So we have gross domestic purchases index, we have PCE price index, and core PCE. Now, core PCE and PCE price index came down through Q3, but then began to rise Q4 into Q1. So we had already bottomed. So just like in price charts that you're looking at that I like Bitcoin and traditional markets, it hit a low and it started to rebound Q3 into Q4. Now this was in the, of course, preparation and run up to the election. We hadn't yet gotten any cuts, by the way. There were no rate cuts, and we had already seen that inflation was back on the rise, and that there was more economic spending going on. So the key inflation metrics, one of the big ones here that I want to note here is core PCE, excluding price and energy, and then you have personal consumption expenditures, PCE. This tracks the price specific changes for goods and services bought by customers. This is the Federal Reserve's primary inflation metric or gauge. Now, that is your PCE price index. That was tanking very fast coming into Q3, and it rebounded the fastest of all of the metrics coming into Q4. So what we're seeing in a lot of those numbers that is, and what led to me believing that we were going to need a big correction in Q1 to Q2, or the transition from Q1 to Q2, was this. From Q3 to Q4, I was like, uh-oh, because what ended up happening is we went way leveraged up in traditional markets. When TradFi levers up, you need a delevering event. And typically it's going to take, we saw it begin the Q3 throughout that into Q4. So we saw the big levering up through the summer coming into the fall. It's going to have to delever, and it typically delevers in about 2 quarters later. And that's exactly what we saw. I wasn't some genius calling the markets like I'm some savant that knows the future. It's that the freaking data was right there in front of us the entire time, right? Here's another fun thing. So we just had metrics come in that are month over month metric. And I'm going to point out a few things here that I think are important to understand here. This is PCE manufacturing, and I'm sorry, PMI manufacturing from ISM. I suggest that everybody go and look this stuff up. I'm just going to run down a few things here that are important on this report. Employment, very important. This was contracting from coming into March. So from contracting coming into March, and then grew in September by 1.8% for employment. If we look here, we look at inventories, did come down. So we were growing and we went into slowing, but supplier deliveries were increasing. They were already slowing because this is month over month, right? This is reading the March data coming into April when the tariffs were being implemented. We saw imports also come down. So imports started to slow. Why? Because everybody front run in January, February, and the beginning of March. They started to slow down coming into the end of the quarter for tariff implementation. So we saw the big jump in imports. That was all January, February. So some of that was everyone knew what Trump's tariff policy was. So it's like, get your imports in now. And one of the big things that we did see only a little bit was customer inventories. This has already been on the too low metric for a very long time. It was already trending this way for a very long time. And in fact, it started to trend this way. You know, what's funny is when we saw the rebound on inflation was the exact timing of Joe Biden's tariffs on China that no one even knows about. No one even talked about it. But post-Chips Act, he threw tariffs as much as 100% on batteries on China. Now, were they well enforced? No, but if you actually went through the proper way, you were going to pay those tariffs coming in. So we had already seen a lot of this stuff already start to occur. They got ahead and started to already tariff the shit out of China, 25 to 100%. Oh, but Trump's at 145% and 125% on this and that. Yeah, and they're negotiating on what's going to be the best outcome for that. So we still have to see what's going to come out of that. But the biggest thing is look at employment across this. We have an increase in employment. for PMI. And then we have services that just came out, services PMI. And you can see what this measures. You can go to these reports. You can Google them. What do we see? We see an uptick in employment, 2.8%. Now, this was coming from contracting to expanding. So we had numbers that were coming down month over month and now are going back up March into April. So we have more employment. We have imports started to fall again. Now, why am I pointing out that imports were really, really high and now they're falling? Because if we go back to that GDP metric, right, where we look at the big import bar, that purple bar that I have on my screen here, this big bar was the first quarter. So if we're not importing as much, what's going to happen to this bar? It's going to go to the right, which means that all of these overperformance, by the way, investment in Q1, massive investment. You know how Trump has been touting all of the investment metrics? Like, hey, we're at 3 trillion, we're at 5 trillion, soon to be 8 trillion, soon to be 10 trillion. Well, this is the real investments. They're actually hitting. So when people say like, no, they haven't even actually allocated the money and spent. Yes, they're spending the money. That's why investments are up. This is also tracking the markets for investments as well. So we will see a little bit of a cut to this coming in, right? So we have real investments. We also have the markets that are factored into this. So growing investment in our markets. So we did see a lot of that. We had new highs coming into the first quarter, right? Plus we have new investment coming into the country that the Trump administration is touting. Consumer spending did come down a little bit, but year over year, but stayed okay. The big part here is when we're looking at the month over month, pay attention to the month over month as we come into the end of the quarter. We're seeing improving metrics there. We don't have solid ones here, but it's about 49% to around 52 to 53%. So about anywhere from a 3 to possibly 4% rise on healthcare side as well. So understanding these metrics is going to give you a much better view of what's going to happen in markets like this. And all of the people that have been hand-wringing for months and months and months and sweating every move up and every move down, you can get edge in these markets by understanding what's happening and how things are flowing on the month-to-month basis. And of course, you're getting an early indicator of that in many cases when you're looking at the traditional market side of things, right? So the market didn't really care too much. Lower term time frame volatility, we already put in highs. If it continued down, that would just be furthering, the correction that we're seeing in traditional markets right now. The important part is when looking at bonds and Dixie here, I have an aggregate bond metric for this is an ETF that essentially says price go down, rate go up. Essentially. So this is corporate grade bonds. Technically, rate would go up. They don't always have rates go up on these high yield investments. When you see a sell off in this, rates go up. When you see this is 7 to 10 year, just aggregating between the 10 year yields. When we see this go down, rate goes up. When we see this go up, rate goes down. And then we have the 20 year here. Why am I showing this? Because you see the big massive moves down, which means that yields spiked. So big massive move down on the 20 year, big massive move down on the 7 to 10. We saw a big move down on corporate bonds across the board here. And then what else did we see move down? Dixie moves down, right? So what did we just witness? We witnessed what is called a delevering event. That means that there was corporate bonds and treasuries being sold, and then they exited the dollar. What was Besant's goal again? Get foreign investors out of our markets, get American investors back in. We want to control the way that investments are being run in our markets. And now that we have a lot of parked capital on the side, because it's not just all foreign investment, but you can tell that a lot of it was because we saw the drop in Dixie at the same time that we saw the drop in all of the bond market. Now, I'm being very, very high level. There is a ton of nuance and a whole lot of shit that if somebody who's very experienced ever wants to have a like robust conversation about this, we can. But this is more of just giving you the idea of where is what the administration doing. Are their goals being met? And you can see clearly in the data that what they're saying they want to happen, they are seeing happen now. And for those that say like, oh, nothing's being done, and one day they're saying they're in negotiations, then the next day, that's all noise. Because what's happening behind the scenes in the real economy and the real data is actually happening in accordance to what they want and what they're saying. Now, of course, there's speculation that Trump, he wasn't prepared for this much of a sell-off and this and that. And like, hey, that's why he's reversing course and saying that he wants to do deals now. And he's capitulating and he's, all this other shit about like, yeah, I'm open to deals with China. Meanwhile, everybody's like, and Z, he's strong and powerful. They're going to stand up to us in America. And this is really bad for us. And then all of a sudden the news comes out that no, they're willing to talk. And then Trump says he's not talking. And then China says they're not talking. And then they say they are. Of course, you didn't see the same news stories about Z capitulating or anything like that because the American media just intensely hates this particular administration. But it's the same reason why you didn't hear about the tariffs on China last year when Joe Biden put tariffs on China, right? That were very, very high tariffs, by the way, in across various sectors. You didn't hear about it because there's a media bias. So if you want to cut through the media bias, both positive and negative, no matter what side you're on, go and look at the data yourself. Then try to understand what you're seeing in markets as it relates to that data. And you will not have trouble as long as you're not listening to the bullshit and the narrative that they're trying to create. Also, buy Bitcoin and get you some SBTC and some USDH. Thanks, guys.
Can't hear you, Peace.
You're muted, Peace.
Both of us muted. I was talking, he was talking, nobody. We're both muted. Clip that.
Oh,
that
man,
happened.
you didn't hear me adding awesome extra side commentary to Landy's analysis that whole time? Oh, man. That's terrible.
No, I did not.
All I was... Thank you, Landy. That was really... I love that you brought this to us. And you know what? No one watching CNN or Bloomberg or anything is getting that information. No one's getting that data. So thank you for providing that for our viewers.
Yeah, you guys make sure that you follow CryptoLandy on X. Tune in on Tuesdays around 1 p.m. ET to learn TA with CryptoLandy on DeOrganized. Yeah, get you some stacks, get you some Bitcoin, hodl on, stay strong. Forget about it.
Right on. Thank you all. Do you guys have any last words? I think that kind of wraps up coverage. That we had a tremendous turnout. There's definitely demand for this kind of stuff, so we will definitely do more of these breaking news drop-in.
Great show, guys.
Thank you, Shift, for joining us. Jack, always Landy, you carried the show, man. You really provided a tremendous amount of value, and you break it down very well. You clearly know what you're talking about. You can see right through a lot of the bullshit that's out there. So really, thank you for providing that for us. We really appreciate you. And GP, as always, man, great stuff. You guys have any last words? How you guys feeling about it?
Feeling like something's got to give eventually, right? It's not going to stay like this forever. Be sure to tune in at 7 p.m. ET Monday through Friday for DeOrganized Nightly, as well as the Let's Go morning show Monday through Friday at 8:30 a.m. ET. Go to deorganized.media, set up your profile, go view the show schedule to stay in the know. Base builders build on Bitcoin via stacks.
Yeah, I just longed some stacks on Dollar, by the way.
Me too.
Had to. Yeah. I wanted to see what the market was going to do in response to the minutes, and it seems to not care a whole hell of a lot one way or the other right now. So
Looks like they expected it.
That seems generally flat after running this morning, so or running last night. So it didn't see the report as bad news. I don't think it didn't see the press conference as bad news. So markets seem to be flat with maybe a little bit of cautious optimism.
Well, here's what you're going to find, guys. You're going to find that if markets go down, they're going to be like, oh my God, it's because Trump is fucking up the economy, everyone. And if prices go up, they're going to be like, Powell's going to save us with rate cuts, probably. He was very positive and dovish. It's even though we put in highs already. Yeah, pretty much. So, look, I want to thank you guys. I appreciate you. And thanks for having me on.
Right on, right on. That wraps up coverage of a DeOrganized breaking news event. Thank you all for tuning in. I am PeaceLoveMusic. We are DeOrganized Media coming at you live randomly, not even just every Monday, sometimes again in the middle of the day. Y'all have a great
keep the options open.
Yeah, you never know. We could come up at any time. Be ready. Nobody expects the organized breaking news show. Y'all have a great rest of your day. Thank you, Chads, for joining us. Peace out.